good evening, and welcome back to Dinar Shift. We open tonight with a profound question echoing across international currency forums and social media platforms, a question that has galvanized a segment of the global financial community. Could the speculation surrounding the Iraqi Dinar and the Vietnamese Dong finally culminate in a dramatic Revaluation RV event when the clock turns over tomorrow? The level of collective anticipation right now is palpable, fueled by intense community chatter, unverified posts, and a persistent hope for a significant currency shift that has been discussed for years. We are delving deep into the substance of these claims, aiming to dissect the meaning of an RV activation, the foundations of this widespread excitement among holders of these currencies, and a rigorous examination of any purported evidence currently being circulated. Our mission is to provide an objective, factual breakdown of the prevailing narrative, weighing the genuine economic backdrop against the speculative fever that tends to surround these assets, and to explore whether the current surge in optimism is genuinely supported by verifiable financial data, or if it represents a continuation of the wishful thinking that has characterized this space for a long time. It is crucial to remain with us until the conclusion of this extensive report, as we will methodically walk through the necessary due diligence and cautionary measures one should take regarding holdings of the Iraqi Dinar and the Vietnamese Dong, an essential reality check that may prove to be one of the most critical informational sessions you engage with this year, regardless of your personal position on these currencies. The central concept dominating these conversations is the notion of a currency revaluation, or RV, a financial mechanism wherein a country's monetary authority officially and dramatically increases the exchange rate of its currency against major international currencies, most notably the US dollar. This process is distinct from AS redenomination, which involves dropping zeros without changing the currency's fundamental value, as the RV aims for a substantial, functional increase in purchasing power. For those invested in the Iraqi dinar, the underlying belief is the realization of a decades-long expectation, a massive, sudden increase in the dinar's value, moving from its currently managed, low-pegged status to an exchange rate that could generate substantial paper gains for existing holders. The discourse around the Vietnamese Dong operates on a parallel logic. The Dong is currently maintained at a very low nominal value relative to the dollar, and a revaluation event, if decreed by Vietnam's central banking institution, is similarly imagined to unlock substantial profits for speculators. However, it is an undeniable economic reality that currency revaluations of this scale, especially involving currencies that have attracted such a high volume of foreign retail speculation, are exceedingly rare and do not materialize spontaneously. Such an event would necessitate extensive, meticulous planning, high-level as international economic collaboration, and invariably clear, formal declarations from the issuing nation's central bank and government. Financial experts consistently caution that the vast majority of the concrete promises, guaranteed dates, or spectacular predictions linked to a sudden dinar or dong revaluation should be viewed with a deeply skeptical eye, as they are overwhelmingly speculative and lack institutional grounding. So, the inevitable question arises: what specifically has focused the intense, albeit volatile, energy of online communities and chat groups onto tomorrow's date? Part of the narrative points to recent, yet unconfirmed, reports of certain activities within Iraq's financial landscape. Specifically, there have been citations of small movements in the parallel or street exchange market, with some currency exchange offices in major centers like Baghdad and Erbil reporting the dinar rate inching toward a certain threshold, purportedly moving marginally from an earlier rate to a slightly higher figure in dinars per $100. The original transcript said it a shift from 141,600 dinars per 100 to 141,700 dinars per 100 in Baghdad central exchanges, interpreting this minute movement as a signal. Proponents of the RV thesis are interpreting these often transient fluctuations in the black or gray market exchange rates as significant pre-RV moves, or undeniable signs that a major, systemic shift is currently underway within the Iraqi monetary system, signaling that the Central Bank of Iraq's CBI is positioning the currency for a larger, official adjustment. Concurrently, the Vietnamese Dong narrative is being sustained by a stream of online rumors suggesting impending good news about a revaluing action from Vietnam's central bank. These claims, however, often lack the clarity, consistency, and official sourcing that would typically accompany genuine, impactful economic policy changes of this magnitude, demanding critical scrutiny of their true predictive power and highlighting the reliance on community chatter rather than official declarations. To properly contextualize the Iraqi Dinar discussion, one must look at the substantive economic initiatives Iraq has been pursuing to rebuild its foundation. The nation has been engaged in significant and complex efforts aimed at economic stabilization, including the onerous process of debt restructuring, a focused drive to increase its vital oil production capacity, and a massive, ongoing project to modernize its historically vulnerable and underdeveloped banking system. These foundational efforts, the establishment of a stable macroeconomy, the development of credible, internationally compliant banking infrastructure, and the fostering of transparent governmental institutions are undeniably the non-negotiable prerequisites for any successful currency revaluation. Such major currency reform requires solid foundations to prevent immediate destabilization. Without these solid structural foundations firmly in place, any attempt at a rapid, dramatic revaluation of the dinar would introduce an unmanageable level of risk, potentially leading to catastrophic economic collapse, widespread market chaos, or runaway hyperinflation, effectively undoing years of rebuilding and reform work. This leads many professional economic analysts to pose the fundamental question: despite the very real progress Iraq has made, has the country achieved the level of institutional maturity and economic diversification required to support a sustainable, meaningful currency revaluation that goes beyond mere speculation, particularly given its continued high reliance on oil revenue for its budget? This necessary skepticism is further amplified by a long, well-documented history of failed predictions associated with the Iraqi dinar's revaluation, a pattern so persistent that certain publications have specifically titled analyses to address this phenomenon, such as one cited article focusing on the Iraqi dinar revaluation deception, and exposing 10 persistent false claims that have circulated for decades without ever materializing into actual delivery. This historical context serves as a powerful testament to the longevity and cyclical nature of these rumors. Even with the emergence of new, minor market fluctuations or unverified claims of banking system preparation, the institutional history strongly advises a position of profound caution for anyone monitoring the situation. A reputable source focusing on Iraq business news, for instance, often underscores that while it is vital to track any credible signs of reform, it is equally important to remain circumspect and resist the temptation to succumb to market hype, particularly when facing narratives that have been promoted for years without delivery. Shifting the focus to the Vietnamese Dong, its economic backdrop presents a picture of AR's robust and dynamic growth, consistently positioning Vietnam as one of the fastest expanding economies in the entire Southeast Asian region. The country's strong manufacturing sector is booming, its export capacity is rapidly expanding, and there is a continuous, substantial inflow of foreign direct investment, all of which logically point toward a gradual, fundamental appreciation in the dong's value over a sustained period of time due to market forces and improved economic metrics. It is absolutely reasonable to expect that, at some future juncture, a larger or more formal structural adjustment to the Vietnamese dong's valuation could be considered by the government and central bank, purely based on the country's impressive economic trajectory and improved international standing, a sign of its increasing global economic integration. However, expert analysis is quick to point out that the dong's exchange rate remains under the Escher's tight, highly managed control of the State Bank of Vietnam, a key component of its export-driven economic strategy. Any notion of a sudden dramatic revaluation, in the style imagined by retail speculators, is considered extremely unlikely without a highly controlled, carefully communicated, and meticulously planned policy shift by the central bank, which prioritizes macroeconomic stability over sudden changes. As one financial piece noted, investing in the dong is far from a sure bet, and it contains a clear warning for speculators to exercise extreme prudence. The core takeaway remains that raw economic success, while positive and indicative of future strength, does not automatically translate into or preordain a dramatic, instantaneous, overnight currency revaluation event. Rather, appreciation is expected to be gradual. This underscores the crucial difference between gradual, market-driven appreciation, which is economically plausible, and the sudden, dramatic leap often promoted in speculative communities, which flies in the face of modern central banking practice for rapidly growing economies. The excitement currently captivating many holders of both the dinar and the dong is being stoked by an assortment of highly specific, yet frequently anecdotal, claims that coalesce around the imminent tomorrow narrative. These unverified reports are diverse, including assertions that certain physical currency exchange dealers have purportedly temporarily halted sales of specific banknote denominations, a move interpreted by some as internal preparation for a value change designed to prevent arbitrage. Furthering this narrative are claims suggesting that significant banking system updates have been scheduled for Iraqi banks, specifically involving the installation of new software allegedly designed to handle much higher nominal value transactions in preparation for an RV. Proponents also eagerly cite various international trade agreements that are reportedly in the final stages of negotiation, agreements they claim implicitly necessitate or actively favor a stronger currency for both Iraq and Vietnam to facilitate global commerce. Additionally, there are persistent mentions of central bank officials holding meetings and the deliberate alignment of various unrelated economic events, all of which are strategically woven together to support the compelling narrative that something big could drop tomorrow. However, a fundamental, non-negotiable reality must govern any analysis of these claims. The vast majority of these circulating assertions are either anonymous, unverified, or purely speculative narratives built on hope and amplified through online forums and social media. The simple, sobering fact that a long history of identical tomorrow predictions have failed to materialize over the last decade must serve as a powerful, necessary check on expectations for all who are tracking this story. This consistent pattern of failure should humble expectations. It is absolutely paramount to address the serious, documented risks and to inject a strong dose of reality into the conversation surrounding these speculative foreign currency purchases. Numerous independent studies and official warnings issued by financial regulators across multiple jurisdictions have repeatedly highlighted that the Iraqi dinar investment market, in particular, has unfortunately served as a fertile ground for scams and fraudulent activities for many years, often preying on the hopes of unsophisticated retail buyers through the repeated use of guaranteed dates. For example, public U.S. court documents have chronicled instances where promoters successfully ran complex layaway contracts, aggressively selling dinar holdings while promising investors that the revaluation was slated to happen tonight or tomorrow. Yet the promised change in value never actually occurred, leading to significant investor losses and forfeited deposits. Similarly, government warnings in the U.S. point to foreign currency fraud involving the purchase of both the Iraqi dinar or the Vietnamese Dong, which are often sold to retail speculators based on the explicit promise of guaranteed gains, that fundamentally defy established financial principles and regulation. If you currently hold these currencies or are contemplating acquiring them, a state of hyper-vigilance and extreme caution is entirely justified and necessary. It is crucial to internalize the understanding that this entire market operates predominantly on speculation and narrative hype, rather than conforming to the standards of a conventional or regulated investment vehicle in the global foreign exchange market, meaning it should be approached with only money you can afford to lose. To properly ground the discussion in economic reality, it is essential to examine the genuine institutional and economic requirements necessary for a successful, legitimate currency revaluation. Firstly, the central banks of the issuing country must officially decree the change, shifting the fixed or managed exchange rate to a significantly higher level or executing a redenomination with a new peg. Secondly, the entire domestic banking and payment infrastructure must possess the technical capacity and institutional sophistication to seamlessly handle the newly established higher nominal values and the inevitable surge in liquidity and transaction volume that would accompany such a massive change, requiring new software installations and readiness. Thirdly, the international financial markets and critical trade partners must demonstrate a readiness and willingness to accept the new value to prevent immediate economic shock or a destabilizing flight of capital and confidence, requiring coordination. And finally, but perhaps most importantly, the country's macroeconomic fundamentals must be demonstrably stable, evidenced by low, controlled inflation, robust foreign reserve levels that meet international standards, and a credible, transparent governance structure that can enforce the new valuation. Without the synchronized presence of all of these crucial elements, even a sudden currency revaluation, if unilaterally enacted, is highly vulnerable to immediately backfiring, leading to damaging imported inflation, widespread black market arbitrage opportunities, or a profound, possibly irrecoverable loss of both domestic and international financial trust in the currency and the government. In summary, a genuine, successful currency reform is an intricate, system-wide process of monumental proportions. It is emphatically not a switch that is arbitrarily flipped purely on the basis of social media frenzy or anonymous online rumors, unlike the simplistic narrative often presented. In the specific context of Iraq, the Central Bank of Iraq has consistently managed the dinar's official peg to the US dollar, and while historical data confirm instances of the currency being redenominated or formally devalued, it has not been as revalued upward in a dramatic overnight event aimed at speculator gains. Therefore, approaching the perennial, tomorrow, claim with a necessary and deep sense of healthy skepticism is the most prudent stance. The extensive record of past dates floated for a Dinar or Dong RV that ultimately passed without consequence should be the primary cautionary indicator. A single failed date prediction is not an isolated event, but a part of a long-standing pattern. The same article that exposed the Dinar revaluation deception precisely documents how specific date predictions have consistently and demonstrably failed over several decades, highlighting the need for verifiable sources. Consequently, when you encounter the inevitable flurry of social media posts aggressively asserting that this is the day, the fundamental, objective questions you must ask are these: what is the verifiable, institutional source of this information, and is it official? Has an unambiguous governmental announcement been made, and is there credible economic logic that provides a rational basis for such a claim, coupled with documented regulatory change? In far too many previous instances, the honest answer to these critical questions has been no, emphasizing that simply hearing, tomorrow, is insufficient justification to undertake any significant, high-stakes financial action without risking profound disappointment and potential financial harm, as past hype has repeatedly failed to translate into reality. However, purely for the sake of completeness and objective reporting, we must consider the hypothetical scenario: what could technically happen tomorrow if the intense rumors, against all historical precedent and expert analysis, were to prove correct? One possibility, the highly anticipated jackpot scenario, involves a formal government or central bank declaration establishing a new, significantly higher official rate for the dinar or the dong. Following this, the banking system may open for redemptions or exchanges, and currency dealers would start quoting the new official rate for transactions, making existing holdings more valuable. For holders, this development would indeed represent a substantial, immediate increase in the paper value of their holdings. But a far more realistic possibility, even in the event of genuine reform, is a gradual change and a phased implementation spread over days, weeks, or even months rather than a single, sudden, dramatic leap, mitigating market shock. An entirely different and equally plausible possibility is that nothing happens, or the announcement is vague and relates to another reform, which still may not translate into actual, substantial gains for currency holders, as imagined by the speculative community, failing the ultimate test of transactional reality. If you are one of the many individuals currently holding the Iraqi Dinar or the Vietnamese Dong, there are several extremely practical and non-emotional steps you should prioritize, irrespective of the current rumors. Firstly, you must have a predetermined, clear understanding of exactly where and through which licensed institution you can physically exchange your holdings, as many mainstream banks do not deal in these exotic currencies and limitations may apply at exchange offices. Secondly, you must diligently maintain meticulous records of your entire purchase history, including the exact rate you paid and the date of acquisition. Realizing any gain, even a modest one, from a currency exchange will almost certainly carry significant tax implications in your country of residence, and detailed records are non-negotiable for compliance with national laws. Thirdly, you must resolutely avoid making any emotional, high-stakes financial decisions that are based purely on hype. If any promise suggests overnight riches, the only reasonable response is to probe for the verifiable, underlying economic reason and to commit to using only money you can afford to lose, maintaining a strong focus on risk management. It is equally important for speculators to manage their expectations regarding the potential magnitude of any realistic gains. Some in the Dinar and Dong communities expect the value to leap to near parity with the US dollar or some other extraordinarily high number, a scenario financial experts consistently label as profoundly unrealistic. This assessment is based on the undeniable economic reality that the dinar does not freely trade on global markets, and its peg remains actively managed by the Central Bank of Iraq, which controls the currency's supply and value. Investopedia, for example, points to the managed peg and limited global trading volume as reasons to be skeptical of the jackpot scenario. The same logic of managed exchange rates and structural economic constraints applies to the Vietnamese Dong. While its value may appreciate over a sustained period due to Vietnam's economic strength, a dramatic, explosive overnight change is unlikely given its current structure. Therefore, if you hold either currency, thinking in scenarios of modest appreciation is more prudent than banking on the purely speculative dramatic leap. To further protect yourself and maintain an objective perspective, it is imperative to become fluent in recognizing the critical red flags that often accompany predatory promotion in this specific market. Primary among these is if someone guarantees you a specific rate or return from the revaluation of the dinar or dong. Such guarantees are almost always a scam warning sign, according to financial regulators. A second major red flag is if promoters tell you, tomorrow is Tichy date, yet provide no official documentation or credible sources to substantiate the claim, relying instead on inside information. The article exposing dinar revaluation false claims highlights specific tactics such as a pressure urgency and reliance on unverified inside information as common red flags. Furthermore, caution is warranted if the currency is being sold in packages with extra fees or is aggressively linked to other questionable offerings. Finally, a practical, fundamental verification step is to confirm the actual tradability of the currency in your country, ensuring that you can practically realize any paper gain and not be left merely holding a non-convertible physical note that is difficult to exchange. The persistence of these pervasive revaluation rumors, even in the face of decades of disappointment, is deeply rooted in a compelling and potent narrative, the almost mythological story of buying a near worthless currency and then getting a windfall when the government declares a massive value increase. This narrative powerfully taps into deep-seated hopes for life, changing financial freedom, and is emotionally compelling. Furthermore, within certain smaller online communities, the Dinar and Dong narratives serve as a powerful communal focus, generating strong, self-reinforcing group momentum and shared expectation. But the undeniable reality is that currency values are rarely dictated by collective hype or online chatter. Instead, they are rigidly driven by complex macroeconomic fundamentals, trade balances, political stability, and global investor confidence. The Iraqi dinar continues to face significant structural limitations, including limited global trading volume, the Iraqi economy's deep dependence on oil, and persistent banking system challenges that are difficult to overcome quickly. The Dong similarly faces export-oriented pressures and currency management considerations. Therefore, the key to following this developing story tomorrow and in the future, if you are a holder of either currency, is to deliberately tune out the noise of social media and instead rigorously monitor only a series official channels of information. This includes the direct publications and statements from the Central Bank of Iraq, Iraq's Ministry of Finance, Vietnam's Central Bank, credible financial news outlets, and major currency data providers. A genuine systemic RV event would be immediately and undeniably accompanied by formal official statements, mandatory system-wide updates to the banking sector, and immediate international notices. If your only source of information is an unverified forum post asserting that what's happening, you must treat that information as a speculation. Furthermore, a crucial practical aspect to watch is the state of market as liquidity. Even if a headline rate change is announced, can you actually exchange your holdings? Are exchange services offering realistic rates, or are there large spreads, delays, or limits, which matter as much as the rate itself? If, as is entirely possible given the historical context, tomorrow passes uneventfully without any significant or official announcement, it is crucial for holders to not panic or assume immediate loss. Many long-term investors in these currency communities have endured years of waiting and previous waves of predicted dates that failed to materialize. The non-occurrence of a specific prediction does not inherently preclude the currency from appreciating in value over a long-term horizon. It simply indicates that the highly specific, speculative timing was incorrect. The downtime should be strategically used to conduct a sober reassessment of your personal strategy. You must ask yourself, what was the original, long-term thesis behind your purchase of the currency? What is your realistic, actionable Oz exit strategy? And are there genuinely better uses for your investment capital? Remember, having a long-term view combined with realistic expectations is often wiser than banking on a speculative overnight event, as the story may still evolve over weeks or months, or perhaps never in the way hopeful holders expect. We should also seriously consider and prepare for what a partial, or as incremental revaluations, might realistically look like, as opposed to the massive, instantaneous jump that the speculative community has been consistently hoping for. For example, the currency may be gradually allowed to float more, its peg relax, allowing small appreciation to occur naturally, or certain banking reforms may increase its accessibility and stability. This measured, slow, and steady type of systemic improvement is entirely more consistent with the established practices of modern monetary policy versus the dramatic RV event based on hype. If that happens, holders may still see some gains, but likely not an overnight windfall. This gradual appreciation may still be a positive outcome, especially if you're holding for the long term. Conversely, if you continue to hear claims of instant, massive gains tomorrow, you must be sure to ask, where is the official policy change, and where is the liquidity to back it up, before taking action? In closing, we recognize and respect that tomorrow carries a significant level of psychological weight for a large number of currency holders, but it could ultimately prove to be just another date in the long chronological line of expected RV days that have previously passed without event. What our objective analysis can firmly establish is that the structural, long-term economic developments currently underway in both Iraq and Vietnam are substantial and undeniably real. These economic trajectories are constantly evolving, and the underlying currency values may indeed shift over a period of time in line with fundamental economic progress. But the jump from this speculation to reality is a big one. If you hold the Dinar or Dong, stay informed through official sources, keep your expectations grounded, and manage your risk responsibly. Do not let hype alone drive your financial decisions. We'll be watching tomorrow closely, and we'll bring you updates if anything materializes with official confirmation. Until next time, stay sharp, do your research, and remember, only invest what you can afford to lose. Thank you for being with us on Dinar Shift.